This is Financially Fit Radio with Cory Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Cory provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Cory Sickles.
Welcome back to another episode of Financially Fit Radio. I'm Cory Sickles with Safe Harbor Retirement Group and Wealth Advisors. If you would like any information about what we discussed today, feel free to give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And while you're on our website, feel free to click on that radio page. You can check out some previous shows, as well as subscribe to our podcast on Apple Podcasts, Amazon Music, Google Podcasts, or Spotify. Also, feel free to check out our YouTube page. You can watch today's show, as well as stay informed on our financially fit tips. We're putting about 3 or 4 short videos out there a week as well. Just type in Safe Harbor Retirement Group from our YouTube page. You know, we're here to help and address any concerns that you might have about retirement. Feel free to give us a call again at 614-760-0670 or visit us online at safeharboroh.com. Just remember, you can always schedule a complimentary no obligation meeting with us. We're here to help and guide you to make sure that you have the retirement that you want. Well, today we're going to talk about year end. It's hard to believe we're already in November.
It is.
It is hard to believe. But today, Tony, we're going to talk about, ending the year strong with, some strategic financial moves that you should look at as you kind of wrap up 2024. But more importantly, think about some of the things you might want to try to accomplish in 2025. So before we dive into that, Tony, how you doing?
I'm doing great, and I think it's fun that you wanted to call this show The Closing Bell. So
that's right.
I had that sound effect ready to go for the show, but it's the closing bell for this year, especially when it comes to taxes and finances. So great timing on this. I'm doing great. I did a great weekend. Ohio State won. My Vikings finally won again, so I'm excited about that. I was actually at the game. That was fun. Also, family. I have 2 daughters. I have 3 kids, but 2 daughters. Both of their birthdays were this past week. They're both 2 days apart, so we took them out and did the birthday thing with my daughters. My wallet's a little lighter because of that, but celebrating the kids' birthdays, but that was fun. How about you? Now, you've been keeping busy too, haven't you?
I have been busy, Tony.
Yeah.
And you're right. So we we record these, on Monday, just for our listeners out there. We record these on Monday and they play that weekend. So by the time that most people hear this weekend, the election will be over. And
wait, there's an election?
Yeah, I think there is an election.
I haven't heard my text. I haven't seen a text or an email or an ad about it, Cory.
It should be over by Saturday or Sunday.
Oh, I hope so. I hope it's over by the time.
It still might be counting votes. They might still be counting votes by that time. I mean, who knows how all this is going to end up playing out. But and obviously we've already talked about the impact of the election on your finances. Or on your investment portfolios and things like that. So, Ohio State had a great win against Penn State.
Yeah.
Yep. Now we have, looks like the next big game is going to be Indiana.
True. Yeah.
They're undefeated, averaging about over 40 points a game.
That's crazy. It is crazy.
They've already they're 9-0 and already have matched. They've already matched the most wins in school history.
Right. I'm like, wait, Indiana, are we talking about the Hoosiers basketball team? I'm like, I looked at the stats and I'm like, wait, this must be Indiana's basketball team, right?
Yep.
Nope, it's their football team.
Yep. So they got Michigan this weekend. So we'll kind of see how all that plays out.
That'll be a true test, maybe.
Maybe.
Right?
Michigan's not doing well either. So
That's true. That's
yep,
true.
yep,
That's true. Well, hopefully, Ohio State will have time to study the tapes and see what's going on with Indiana.
yep. So again, it's November. One of the things I'll talk about here real briefly, Tony, is November means December's on the way, which means Christmas is on the way,
Oh,
which means our toy drive is going to be starting as
oh,
well.
good.
So for any of our listeners or viewers out there, whether you're listening on the radio or watching it on YouTube, feel free to drop by our Easton or Dublin office. You can drop toys off. We're going to deliver all those on December 12th down at WBNS Channel 10 at their annual toy drive. So, Salvation Army is, of course, involved. And, really the only thing we try to do, and one reason why we're part of all this is to get, we want to get our clients involved in this. But more importantly, we're really trying to just put a smile on a kid's face on Christmas morning.
Yeah, that's great. I love how you do this each year, and you guys do such a good job of getting a lot of toys for kids and helping them Christmas morning. You've even been involved in handing out the toys to the kids on Christmas. That's fantastic, and you're so involved with the community there. I love it. Now, let's jump into today's show. I don't want to get too ahead of ourselves. I can't believe we're already talking about Christmas, but
Yep.
ending the year strong with strategic financial moves. What's the first thing on the list?
The one thing I'm going to probably tell you, everybody out there, is this is a good time to kind of see where you are on how much you've invested in your 401ks or, your contributions, whether it's a Roth or an IRA 401k. If you're over the age of 50 this year, you have that catch up. So that means you can put in up to $30,000 into those. So it's a good time to make sure, if you're trying to max that out, to make sure you're on path to be able to do that. But it's a good way to be able to save. That's probably the most important part. Maybe you have some money in the bank which you can, for your emergency funds, things like that, where maybe you can put a little bit more, because as you know, it's amazing on just contributing a few more $1,000 or a few more, $50, $100, $200 per paycheck, on what that actually can do to your retirement 10, 15, 20 years from now.
Yeah. Yeah, that's huge. And so you really want to do that. That's a really great tip for our listeners out there. What else do we need to know before the end of the year?
Well, this is a good time to look at your investment portfolio too, Tony. And the reason why I say that more than anything is if you look at the market this year, it's up 20+%.
Yeah.
So, which naturally means any stocks that you actually had in your portfolio has gone up, which means if you had a risk level, maybe you were 60% stocks, you actually might be about 70% stocks now, because the bonds didn't go up as much. All I'm trying to tell you is that there's a good chance it probably increased the risk level that you currently have. And if you're concerned about the economy, you're concerned about the election, but every year this is a good time to go in to make sure that you're still allocated the correct way. Again, if you went from 60% stocks, 40% fixed income to 70% stocks, 30% fixed income, it's a good time to go back to make sure reallocate or rebalance back to 60%, lock in some of your gains, and then now you can handle the type of risk that you should have in the market, because it can go the other way pretty quick.
Yeah, rebalancing your portfolio, a good idea, especially now. And people need to not pay attention to the volatility they're going to see that's right around the election, the few days before, the few days after. You always see some volatility, but again, remember that we're up before the elections, up about 20%, the markets. But before next year, and depending on who gets in, there are some rebalancing things, regardless of whether this was a presidential election year or not, right? You should, at the end of the year, it's a good time to have a review of your portfolio.
You should do it every year around this time.
Sure.
Could go the other way, where all of a sudden the market goes down and all of a sudden the bonds are a higher percentage, and you might want to increase it because you can buy low too. So it's something to be able to look at as well. obviously, when we start looking at your paychecks and things like that, Tony, another thing you want to probably look at is your tax withholdings.
Ah,
Are you actually? There's two different types of people. Ones that don't want to get anything back when it comes tax time, the ones that want to get that big check, right?
right, right.
I'm the one that wants to get anything back or owe a little bit,
Yeah,
right?
right.
I'd rather have the money. I'd rather have the money in my pocket throughout the year. I can spend a little bit more. So it's a good time to make sure, whatever you want to be able to do, but it's a good time to make sure that you're at least paying what you should be paying in taxes on your withdrawals. You don't want to be owing too much come the first type of the year. And if you're a 1099 person or you own your own business, hopefully you're paying quarterly. You need to make sure that you're not going to be in a situation where you can't pay that tax liability next year as well.
Right. And that ties into what you were talking about with your investment portfolio as well, right? Because you talk about harvesting your tax losses.
Exactly right. It's a good
Yeah.
time to be able to look at that as well. It's sometimes a little bit tough to be able to. You might have some stocks out there that you have lost money, and it might be a good time to sell it, take some of the gains from the others to be able to offset some of that as well. So
Sure.
yeah, that's a good time to be able to harvest those taxes. That's a good point, Tony.
Yeah, yeah, taxes and tax withholding, that's a big one. You wanna minimize your tax burden. I know that's something you look at for your clients, like, let's look at the big picture, the long-term picture, maybe
Exactly right.
retirement
Mhm.
taxes. During retirement, where are these funds at that you're gonna use later, and how will they be taxed? But as far as end of the year planning, you also have to look at that. You have to say, "Okay, where are you at this year versus where you need to be in the future? And is there anything you can do now before the end of the year to improve either situation?" Right?
That's exactly right, Tony. Yep. I mean, you should always be you should always try to be looking out for how you can do better next year.
Yep.
Whether it's actually saving, whether it's investing, whether it's saving on taxes. Another possible way to save on taxes is, potentially charitable donations too. It's something to be able to look at. Just obviously, I think it's always wise to talk with an advisor or a CPA just to make sure that if you do contribute to a charity, it is going to be tax deductible. With standard deductions and all that type of stuff now, it's something just to be able but it's a good time to review it. If you do need to make some donations at the end of the year, go ahead and do that. One thing that we do a lot of, and hopefully you know about this, but if you're making contributions, say to a church or some type of organization on an annual basis, and you happen to be above age 73 or 72, which means you're required to take money out of your IRA, you can actually have that go to that charity, count towards your required minimum distribution, where you don't have to pay tax on it, but it still fulfills your required minimum distribution. And more importantly, Tony, they don't have to pay tax on it, receiving it as well. So
Yeah.
it's a good way to be able to give to the charity you want, as well as take out meet your required minimum distributions as well.
And not pay tax on that money, which
That's
you would
exactly
have
right.
to do if you just took it out and put it into your account.
And then
And
wrote
I
a check.
and I I've seen people. I saw my own parents make that mistake because I would
Yep.
see them write a check out to the church each month, right?
Right. Exactly
Or
right.
and then once a year, maybe they'd do it once a year and make their donation to the church, but they were over 70 and had required minimum distributions that would come out and go into their account. So they were losing money there because that counted toward their taxable income, which you wanna minimize that number because it
Right.
can even lower Medicare premiums, so there's a lot of things that can do. But plus, why pay tax on that money if you don't have to? You can save tax money on that. That goes to the charity of your choice tax-free if you're really into a charity that you support. I think that's great.
It's a good way to be able to do it, especially if you're not truly needing all of your requirement distributions as income,
Right.
right?
Exactly.
So that's a good way to be able to do that. Speaking, we'll kind of dive in here a little bit from the insurance side of it. But many of you out there might have FSA accounts, and you're going
Yes.
to want to make sure that you use it, or you will lose it, right?
Oh, that's right. Before the end of the year, that's a
Yep.
definite financial tip. Use that FSA, check your balance, right?
Yep. And you have to also see if any of them have grace periods. Some might have a grace period, maybe through March of next year, but you need to make sure you understand that because with FHA or, flexible spending accounts, again, you have to use that within that calendar year or you will lose it. So
Yeah.
it's something to be able to look at. And, right now, Tony, it's annual enrollment period, right, for Medicare.
Yep.
So obviously, one of the things, there's a lot of changes with prescription drugs this year, Medicare Advantage plans. I highly recommend that you actually get a second opinion on where you are and see if there's anything out there better for you. I'm telling you right now, there are a lot of changes in 2025, and there's going to be just as many changes in 2026.
Yeah, a lot to Medicare, healthcare, the costs, the way it's set up, the way it's structured, and what other options you have and how much money those could possibly save you. So you definitely, and don't just respond to something you get in the mail or a message you get or an email saying, hey, this healthcare, now's the time to change and go with us. No, you need to talk to a financial services professional like yourselves there at Safe Harbor, Cory, who are looking out for your best interest and going to say, okay, here's where you're at with your current Medicare. Let's do the math and see what would work. Let's look at all the options, not just one company trying to sell you something that they're going to profit off of. I think that makes a huge difference.
It does. So, for our listeners out there, just give us a call at 614-760-0670, or again, you can always visit our website at safeharboroh.com. Schedule a complimentary, no obligation meeting just to review your Medicare plan.
Yeah.
We have a form we send you. You just kind of complete it. We can do the review and analysis and then come back and tell you whether you're in a good situation or whether maybe there's some other better options out there for you. It doesn't hurt. It's something that obviously healthcare is a big issue that you want to make sure of. That's going to be taken care of, not only this year, but every year that you're alive. Because
Right.
because if you don't choose wisely, it could actually really cost you.
Yeah. Yeah, you definitely want that. And I know that's why you work with Medicare specialists there in your office that can help people.
That's exactly right. One of the things I think everyone should look at is, hey, we've had a full year. So maybe you should start looking at your budget. Where do you actually stand with your budget? Are there things that you can get rid of? This is a great time to be able to maybe check all those subscriptions that you signed up for to find out, are you really using them?
Yep,
Right?
exactly.
Those little $9 and $10 and $15 add up.
Yeah,
They really do.
it's crazy.
And if you're not using it, then, maybe you should lose it. That's the way I kind of look at it. You can have that money to go into savings. You can have that money to be invested. That stuff does add up. Again, if you can add another $50, $100, $200 a month that you're saving, you're going to be in such a better situation later on. But it's a good time to be able to look and see what you're actually paying and to see if you can lower your budget, right? Increase your savings. It's a great time to be able to say, hey, if I lower, maybe my budget's lower, maybe I can have some more money, go pay off debt that you might have. So the one thing I would recommend is as you kind of go through this budget, what should I pay off and what should I save? It's a good time to talk with an advisor. We can help guide you to make sure you're making the right decision on how you're going to actually allocate that money.
Yeah, and I'm thinking about three things that you always talk about on the show, Cory. If you can cut spending, that money can go toward, or really look at things you're spending money on that you don't even use or need. That money can go toward either A, an emergency fund, B, pay off debt, or C, your retirement accounts. I mean, you might be, if you cut spending and increase the amount in your retirement accounts or your investments, you might be able to retire sooner. I mean, that's huge.
That's exactly right. And one thing you did mention, Tony, was emergency fund. So this is a good time to look at how much do you have in your emergency fund.
Good
Maybe
point.
you actually had to go out and spend a little bit more money on some things. Maybe you had to go out and replace an air conditioner. You had to get, new appliances or whatever that might end up being. Again, you want to target 3 to 6 months of your monthly bills. That's what you should try to have in your emergency fund in case something happens where you can't work, lose a job. Who knows what happens? But it's a good way to be able to, have something there so you don't have to dig in that retirement account in order to pay for things.
Yeah. Yeah, I would agree with that. That's true. Build up that emergency fund. That's a good thing to look at before the end of the year, especially since it used to be called a Christmas fund, right?
Exactly
The
right.
Christmas account.
Yep.
So what else should we look at financially before the year end?
Tony, this is always something that you should do. I don't think a lot of people do it. One is if you don't have a will or a trust, you need to get one in place, right?
Yeah.
But let's just say you do have one in place. This is a good time to review the way you have everything set up because things might have changed within the last year. Maybe you got married, maybe you got divorced, maybe you lost your spouse, maybe whoever you were giving the money to is no longer there as well. So you want to make sure all those things are updated. Make sure your beneficiary forms are all set up the correct way because you have to remember, beneficiary forms override that will or trust. And you just want to make sure that it's set up the correct way, especially if you went from a pension where maybe you were, you had a pension, it was going to your spouse, you got a divorce. Now maybe you have a new spouse. You just want to make sure all that stuff's aligned the way it should be. I've had many meetings with clients or prospects in my office, Tony, where it was not set up that way, or they forgot to go in and change something. But that's why, when we have annual reviews with clients throughout the year, that's one thing we're always discussing. Has anything changed? Do we need to update any of your beneficiary forms? Things happen throughout the year, and sometimes you forget to go and update these important documents.
Yeah. Yeah, and you don't want to do that. That is so important. And I've seen it happen with my dad when his father died, my grandfather. And I just, worked hard to help my parents get their ducks in a row and my wife and I for our situation. And you've constantly reminded me, Tony, this is such an important part of financial planning, and that's estate planning. Making sure you have the powers of attorney set, wills and trusts, and beneficiaries on all these financial accounts. Like you say, that's huge.
That's exactly right. And, one of the things that we try to do, Tony, for our clients is we have our generational vault. We call that
Oh,
our
yeah. generational
vault. And it gives our clients the ability to upload all these documents in there. Your will, your trust, your financial, your healthcare power of attorney, statements, maybe even tax returns, anything that's going to be pertinent that you might need, or maybe your executor or trustee might need at some point later in time. It's nice to be able to have one spot where it has all your account information. That's one of the things that's really tough is when someone passes, Tony, is the executor or the trustee now has to figure out where all these accounts are, right? But if you have it in one central location, it's going to be easier on you to maintain. It's going to be easier on your spouse. And more importantly, it's going to be easier for your executor or trustee to be able to figure out where all your money truly is.
Yeah, and that is huge. That is huge. So what's one more thing that we should do before the end of the year?
Well, I would highly recommend that if you don't have an advisor, I think a financial advisor, I think you really should find one.
Yeah.
Hopefully you're going to give Safe Harbor a call. But more importantly, I'm more concerned about just making sure everyone has a good retirement. And even if you have another advisor you want to work with, that's fine. As long as you have an advisor to be able to bounce a lot of these things that we discussed today, on an annual basis or via email anytime, or maybe even a phone call. It's so important to be able to, before you make a financial decision, to get a second opinion before you make the move. And that's what an advisor is going to be able to do for you is to be able to make sure that based upon the information we know, we're going to be able to provide the advice to you that's going to be most beneficial to you. And again, make sure you're working with an advisor who has a fiduciary responsibility. So they're always looking out for you and not for them.
Yeah. Well, there you go. I think that's a great note to end on. That's the closing bell for the year-end list. I love it. I absolutely love it, Cory. Before we go, let our listeners know how they can get a hold of you to set up that consultation.
Yeah, for listeners and viewers out there, just give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. Remember, all meetings are complimentary. There's no financial obligation. We're here to help and guide you to make sure you have the best possible retirement. And it's not only financial, it can also be Medicare, it could also be legal, and it also could be taxes. We're here to help and guide you to make sure that you do the right thing for all those things.
All right. Thanks, Cory. And listeners and viewers, thanks for tuning in. That does it for today's episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Cory Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.